Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold, and taking a little break from all of the company updates that I have today and a couple more that should be coming out today and in the next couple days. We're going to focus on the precious metals sector, starting with the gold stock. So I'm looking at GDX on a weekly basis. And essentially, the last 3 weeks, GDX has been going through a little bit of a correction, tested out this lower 31 level, bounced off of there at least for now. GDX is at least a little lower today as we are recording this, a little before the Fed meeting and Jerome Powell's press conference. That 31 level, you can argue it's right around a resistance point that GDX managed to break through just about a month and a half ago and came back and retested that level. What's your assessment of this correction that GDX is still currently in, you can argue?
My assessment would be that most of the damage is already done. The correction is not over. It's going to continue, but that this correction is very healthy and it's setting up the sector for, the next leg higher, which could really be outstanding. And it's just a question of, when that next leg is going to get underway. Is that going to take, another couple weeks of a correction here, or is it going to be another month or two where there's kind of more consolidation and basing? I don't know, but that sums up how I'm thinking about things, Corey. Compared to, there are some similarities to 2008, but I don't think this entire move is going to be 100% similar. But we've had this really sharp rebound. We had a crash which preceded it, so that's similar to 2008. And in 2008 to 2009, I mean, there were, after the first couple months, there were another 4 or 5 corrections even in the first year. And so that was during a really strong rise. So the corrections they didn't stop that rise. They just interrupted it temporarily. And, the median correction was, I think, around 15 or 16 days long and then about 21%. So this correction, we're in day 15 or so. And last Friday at the low, GDX was down 17%. It got into the 31s. If that gets down to the low 30s, which I think is possible, that would be a 20% correction. So everything that's happening, this is a good thing. This is healthy. I really like how the sector will be setting up as this correction continues and weans out more of the weak hands. Even in the metals, net spec positions have been coming off, so that's good. And this could continue for a little while longer. I'm, positively anxious to see how much lower the net spec positions will be in the metals. So that'll be a good thing. That's basically how I see it. I mean, this is a time to prepare yourself for whenever that next leg higher is going to be. Again, it's too early to say, is that going to start in a couple weeks or a couple months? I don't know yet.
So is this 30 to 31 area on GDX? As I mentioned, it was resistance through 2019 and even early on in 2020. Is this now a key support level that you're watching?
Absolutely. And I'd also mention, Corey, something to keep in mind. The 200-day moving average is just below 29. That's in the high 28s. So, I'm not saying I'm predicting this is going to happen, but don't rule that out. There are probably traders that have stops at 30 or 31. And so, maybe some of those stops could get run. We always see that happen in golds and gold stocks. I mean, happens all the time. So, I mean, even if we came down to 29 or 30, Corey, that really wouldn't bother me. But yeah, 30 to 31 on a weekly and monthly basis, that's really what to watch.
All right, let's talk about the gold price then, because gold, for the most part, has just been going sideways, trading in this range for the last about almost 2.5 months now. It looks strong to me in the sense that, fine, it's not breaking out, but it's also not breaking down. This is while the U.S. equity markets are doing well. So, I don't know. To me, I still think gold is setting up well, although it has been a boring trade over the last about 2 months. What do you think about the setup there?
Well, I think, today it was up a little bit and now it's reverse that. But prior to today, what I like this week, Corey, is at the end of last week, it looked like gold was kind of starting a mini breakdown. And so Monday, Tuesday, it reversed that with a pretty good rebound. So that's something to keep in mind, Corey. If we test 1675 or 1680 and successfully hold that once more, I think I would be really encouraged by that. So at the beginning of this week, there was a chance we could see a little breakdown, and it didn't happen. So I don't know. I mean, is that a false breakdown? Possibly, but that's something we have to keep in mind. Watch for another test of that support, and if it breaks that support, Corey, I wouldn't be that concerned. I mean, looking at the chart, I mean, around 1600, maybe 1590, there's a lot of support there. The 200 days at 1577 and rising. So I'm not predicting that, but if GDX is going to test 29 or 30, then you could make a case for gold, falling below 1680 to 1675. But it's also possible, Corey, that gold could test 1675 again successfully, and at the same time, we see GDX test 30, and then that's the low for the correction. So I'll be interested to see the COT this week and the net spec position, because the nominally speaking, the peak of that was about 385,000 earlier this year, and last week the number of net spec contracts was about 256. So, and that was with gold kind of in the mid 17s. So, we get a couple more weeks, maybe we can get that figure down to 200 or even below it. And if we see that and gold is still holding above 1675, that would be a really, really good sign to me.
This is just a totally different gold market than we had seen for almost a decade. Not quite a decade, because really you go back to kind of the middle part to tail end of 2018 when gold bottomed at about 1167. And now in under 2 years, we are up arguably around $600, give or take, especially from the high over $600 in just those 2 years, less than 2 years. You look at something like the monthly chart and you really see this almost U-shaped pattern here where gold finally broke out. And even your comment saying that if gold drops another $100 from here, it's not even that concerning because of how strongly it has moved. Can you give us a little comment on this long-term look at gold and the different environment that it is in?
Absolutely, Corey. Now, gold, it has this potential cup and handle pattern. Now, the one downside to that would be, in the last couple months, at least on the monthly chart, we could see that gold has gotten close to 1800. And looking at the monthly chart, especially 2011 and 2012, you can see that there's quite a bit of resistance there. So, it would not surprise me to see gold, correct and consolidate for a couple more months, just based on the monthly chart, because that's a huge amount of resistance there, in the upper 1700s, up to the low 1800s. But back to the cup and handle. But if we're looking out over the long term, I mean, this is a very bullish setup, Corey. Now, assuming gold can eventually break past 1900 and make a new all-time high, the measured upside target of that breakout is going to be 2750. And, I don't know, maybe 1800 is going to be more significant resistance than 1900 at this point. And, if we use 1800 instead of 1900, then the measured upside target would be 2550, I think. So that's really that's the upside here, is that gold is setting up for an explosive move higher when it takes out 1800 to 1900. But gold is dealing with that resistance right now. So, I mean, it could take, gold could stay below 1800 for like another 6 months. I'm not saying that's going to happen, but that's possible. So it's just something to keep in mind. But the setup, Corey, once we broke 1375, we had the move to 1550, then we pulled back for a couple months, and then we shot up past that resistance at 1550, got up close to the major resistance at 1800. So now gold is battling this resistance. It's going to continue to battle it, and eventually at some point it's going to go above 1800 and 1900, and then that's when you could see really an explosive move higher in the sector. And I think it's also, last point I'd make, it's possible that the stocks could they could begin their next leg up before gold breaks above 1800. That's something to keep in mind, because if you look at 2008, 2009, and that recovery, at that point, which is similar to now, gold was so far ahead of the stocks that even when gold slowed down and it kind of went sideways for part of 2009, the stocks were still going up. So that's another thing to keep in mind.
All right. Yeah. Overall, hey, it's very encouraging. And just that comparison of how close gold is to its all-time high, and still relatively how far away the gold stocks are from their highs back about a decade ago. Hey, there could be a lot more positive moves here. Let's wrap it up with a comment on silver, because silver took a little bit longer to grind back to where it was before that March washout. But just recently, just last week, silver hit that almost 19 level. It hit 1895 on the continuous contract, right around where it was at the beginning of March or tail end of February. What do you like? What concerns you about the silver chart?
I'm really not that concerned. I really like the silver chart, Corey. I mean, 1850, we could say 1875. That's a very significant level going back 10 plus years. I mean, whether you look at the quarterly chart or the monthly or even the daily or the weekly, it's such a significant level. And so I think that if and when silver is able to take out that level and surpass 19, it's going to be able to move to $20 to $21 fairly easily. And looking at the daily chart, Corey, I like the fact that silver has tested 1850 to 1875. I think four times basically in the last 10 months or so. And I mean, even after getting up there earlier this year and then crashing down below $12, silver was able to rocket all the way back up near 19. It's pulling back now. So I think that the fact that the market has tested this level so many times, and recently it had this great rally all the way back up to that resistance. It's pulling back now, trading at 1777. We've got the 200-day at 1703. The 400-day is in the low 16s. Both are sloping up. I don't know. Maybe silver could come down a little bit below the 200-day. That's possible, but I see this as a really healthy correction in silver, Corey, because this correction is going to be setting up the market, for that move to eventually take out 19 and get to 20 to 21. Now, of course, the question is, when is the correction going to end? When is that move going to happen? Again, I don't have a crystal ball here, so I don't know if that's going to, I don't know. It could take 4 or 5 months, could take 1 or 2 months. I'm not really sure. We'll just have to watch the market closely, keep these scenarios in mind. But in the bigger picture, I do think silver is setting up to break above, 1850, 19, and then get up to 20 to 21 fairly easily. And then when you get up to that level, you're really close to that gap between the low 20s and up to 27. So, if and when silver can take out this 1850 to 19 resistance, Corey, it's going to be setting itself up for, potentially some really exciting moves after that.
All right, Jordan, we're going to wrap it up there. Interesting comments on the precious metals. And hey, overall, even though we are in this little bit of a correction, it is still a very bullish outlook for these metals. And even a more significant drop still doesn't turn that all that bearish. So very interesting to hear. Good chatting with you, Jordan. I will post a link below this interview to your website. Have a great rest of your week. I'll chat with you next week.